Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and we're going to run through a few of the week's biggest stories in the mining industry. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and of course, leave us a comment below. Let's get into it.
Gold was shaping up to have a fairly calm week, but a stronger than expected U.S. jobs report sent it well below $4,400 per ounce as the period came to an end. Silver also took a hit, dropping below $69 per ounce. The report, which shows that non-farm payrolls rose by 172,000 in May, has further reduced expectations that the U.S. Federal Reserve will cut interest rates. Beyond that, the Iran war continues to impact gold, with increased conflict in the Middle East and overall uncertainty contributing to its ups and downs this week. Although the U.S. House has now backed a resolution geared at stopping the war until it's authorized by Congress, the move is seen as largely symbolic. Understandably, there is a lot of focus on these day-to-day factors right now, but this week I heard from Blasi of Neptune Global, who encouraged investors to take a step back and remember the bigger picture for gold. In his view, the metal's ultimate driver isn't going anywhere.
Drivers for gold, ultimately, right? The one that's most consistent is the expansion of debt. So if you look, there's charts that show hard correlations between the growth in the U.S.'s debt and the price of gold. It doesn't, move exactly. And when I mean it's just about exact, but there's times when the debt is still expanding and gold may not be moving up immediately. But so a person has to ask themselves, right? The thing that would truly hurt gold, in my opinion, in the long run, is if the U.S. actually started paying down their debt and that the debt creation stopped or diminished markedly or materially. And that's just not going to happen.
We'll be posting the full interview with Chris soon, so watch out for that on our channel. In the meantime, let us know in the comments if you like to keep tabs on short-term gold price drivers, or if you prefer to focus on the long term. I'd love to hear your thoughts. Central banks were back in action in April, purchasing a net 17 tons of gold. According to the World Gold Council, that's a sizable rebound from March, when they sold a net 30 tons of the yellow metal as the Iran war began. The organization says Poland was the top buyer for April at 14 tons, while China was next at 8 tons. That's the highest level for the Asian nation since December 2024, and it pushes China's gold buying streak to 18 consecutive months. Turkey, which attracted attention in March for selling 60 tons of gold, saw its reserves stay virtually flat in April. Its sales were reportedly for FX and liquidity purposes. Underscoring gold's importance to central banks, a new report from the European Central Bank shows that the precious metal is now the world's top reserve asset. Gold accounted for 27% of all global central bank reserve assets as of the end of 2025, up from 20% the previous year. That puts it ahead of U.S. Treasuries at 22%. While the ECB notes that this shift largely reflects valuation effects and suggests that moving forward, gold will face limitations as a reserve asset, it also notes that central bank gold buying points to a desire to strengthen balance sheet resilience as geopolitical risks rise. What about the gold that countries are mining, not buying? This week, Russia shared its first gold production estimate since its invasion of Ukraine, with the country's natural resources minister saying 480 to 500 tons are expected to be mined in 2026. The numbers are attracting attention for multiple reasons. For one thing, the amount is about 50% higher than the World Gold Council's 2024 Russian gold output estimate. For another, it would place Russia well above China, which is currently the top producer. In addition to that, Bloomberg states that 2 executives at Russian gold mining companies have said they're skeptical about the number. While major producer Polyus is working to bring one of the world's largest gold mines online, no other significant deposits have started up in recent years. Whether we'll ever find out which numbers are accurate remains to be seen. We'll be keeping an eye on the situation to see how it develops.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.